Money is a fascinating concept that plays a crucial role in our society. At its core, money is a medium of exchange, a way for us to trade goods and services without the complications of direct barter. Imagine trying to swap a dozen eggs for a pair of shoes. What if the shoemaker doesn't need eggs? That's where money steps in, simplifying transactions and enabling us to focus on what we do best. Before money, people relied on barter systems. In ancient times, communities exchanged goods directly. If you were a farmer, you might trade wheat for tools with a blacksmith. While this worked in small communities, it had its limitations. What if the blacksmith didn't want wheat? This led to inefficiencies and the need for a more standardized form of exchange. Then came coins, a revolutionary step in the evolution of money. The first coins were minted in Lydia around 600 BC, made from electrum, a natural alloy of gold and silver. Coins provided a tangible, durable, and easily recognizable form of currency. They allowed people to carry value with them and facilitated trade across larger distances, paving the way for commerce as we know it. As societies grew, so did the need for more convenient forms of money. This is where paper money entered the scene. Originating in China during the Tang Dynasty, paper currency offered a lightweight alternative to heavy coins. Imagine carrying around a bag of coins versus a simple piece of paper. Paper money made transactions quicker and easier, and it soon spread across the globe. With the rise of paper money, banks emerged as essential institutions in managing and safeguarding wealth. They provided a place for people to deposit their money and introduced the concept of credit. This allowed individuals to borrow money for investments or purchases, fueling economic growth. Think of it as a way to jumpstart your dreams, whether it's buying a home or starting a business. The gold standard was another significant milestone in the evolution of money. It linked currency value directly to gold, providing stability and trust in the monetary system. However, this system also had its drawbacks, as it limited the amount of money that could be printed, leading to economic constraints during times of crisis. Fast forward to today, and we see a major shift towards digital payments and credit cards. With just a swipe or a tap, we can make purchases instantly. This convenience has transformed how we handle money, making transactions faster and more efficient than ever before. Online banking and mobile wallets have taken this a step further. Now we can manage our finances from the palm of our hand, transferring money, paying bills, and even budgeting, all without stepping foot in a bank. It's like having a personal finance assistant available 24/7. And then there's cryptocurrency, the latest frontier in the evolution of money. Digital currencies like Bitcoin and Ethereum are decentralized, meaning they operate independently of traditional banks. They offer new possibilities for transactions and investments, but they also come with risks and uncertainties. The future of money may very well be shaped by these innovations. Finally, let's address some common myths about money's evolution. Many believe that money has always been tangible, like coins or bills, but in reality, it has taken many forms throughout history, from shells to digital codes. Another myth is that credit is inherently bad. In fact, when used wisely, it can be a powerful tool for financial growth. Understanding the evolution of money helps us appreciate its role in our lives today. It's not just about coins or bills, it's about the systems we've built to facilitate trade, foster growth, and connect us all.